We are covering these 4 top stocks with 100% plus gains today. While watching bullish price actions, let us inform you. Our review on RSLS ReShape Lifesciences Inc, a company specializing in weight loss and metabolic health solutions, just made waves in the market with a major after-hours stock surge. Best known for its lap band system, Obalon balloon technology, and investigational diabetes block stim neuromodulation system, the company is focused on non-invasive and minimally invasive treatments for obesity and metabolic disorders. But what's grabbing attention today isn't a new product. It's a delay in filing its annual 10K report. Now, on the surface, a delayed financial filing isn't exactly the kind of news that sends a stock soaring. Usually, it triggers the opposite reaction. Investors get nervous, fearing accounting issues, undisclosed financial troubles, or other problems behind the scenes. But in ReShape's case, the stock exploded after hours, surging over 340%. That's not a normal reaction to a delayed filing, which raises the question, what's really going on here? The company says the delay is due to needing more time to complete financial statements and disclosures, and they expect to file within the standard 15-day extension window allowed under Rule 12b-25. Most importantly, they're stating that they don't anticipate any major changes to their financial results compared to last year. That's a reassuring signal, but it still leaves room for speculation. If there's nothing new or unusual in the financials, why the delay? And more importantly, why is the stock responding so aggressively? A few things could be at play here. First, when a stock is thinly traded or has a high short interest, even a small wave of buying can trigger massive moves. If traders or algorithms see a headline and react before fully understanding the details, you can get wild price swings, especially in after-hours trading when volume is lower. Second, it's possible that investors were already primed for news. Maybe rumors were swirling about a potential catalyst, and this filing delay was misinterpreted as something bigger. There's also the broader market context to consider. The weight loss and obesity treatment space has been getting a lot of attention, especially with the rise of GLP-1 drugs like Ozempic and Wegovy reshaping the industry. Companies offering alternative or complementary treatments could be benefiting from increased investor interest in the sector as a whole. If ReShape has something brewing, whether it's progress with its lap band 2.0, advancements in its diabetes neuromodulation technology, or a potential partnership, it could be adding fuel to the fire. For investors, the key takeaway is to watch what happens next. A 340% jump in a single session is extreme, and it's often a sign of speculative trading rather than a fundamental shift in the company's outlook. If the price stabilizes and holds gains, it could suggest that investors see real value here. But if it crashes back down once the hype settles, it might just be another case of a low-float stock getting caught up in a short squeeze or momentum trade. Either way, ReShape Lifesciences just got a lot of new eyes on it, and whether this is the start of something bigger or just a flash in the pan will depend on what the company delivers in the coming weeks. Our review on BIAF bioAffinity Technologies Incorporated, a biotechnology company specializing in early-stage cancer and lung disease detection, just set off a firestorm in the stock market with a record-breaking revenue report. The company's flagship product, CyPath Lung, is gaining serious traction, and the market is reacting in a huge way, sending the stock up a staggering 319% with nearly 500 million shares traded. That's not just a good day. That's a complete shift in investor sentiment, and it's worth digging into what's driving the excitement. Let's start with the numbers. bioAffinity reported $9.4 million in revenue for 2024, an absolutely massive 270% jump from the $2.5 million it posted in 2023. That's the kind of growth investors dream about in the biotech space, and it didn't happen by accident. The company saw a mind-blowing 1,400% increase in demand for CyPath Lung, while the number of physician offices using the test tripled over the year. When a company's core product gains this much traction in such a short time, it's a strong signal that it's onto something big. But revenue growth is only one part of the equation. The company is still operating at a loss, posting a net loss of 75 cents per share. But even that's an improvement from the 91-cent loss in 2023. This means bioAffinity is not just growing revenue, but also getting more efficient. On top of that, it ended the year with $1.1 million in cash and brought in another $1.4 million through warrant exercises, boosting its financial cushion. So, if things are looking so strong, why did bioAffinity lower its revenue expectations for 2025? That's the part of the report that might give some investors pause. The company is forecasting $6 million to $8 million in revenue for next year, a decline from 2024. But before sounding any alarms, there's a key reason behind it. The company is cutting profitable pathology services to focus on what's actually making money. This is an important move that a lot of biotech startups fail to make. They keep trying to grow everything at once instead of doubling down on what's working. bioAffinity is taking the more disciplined route, improving its business model to become more sustainable. Despite this conservative forecast, the stock went absolutely ballistic. A 319% gain in a single day is not normal, and it suggests that more than just long-term investors are in the mix. A move like this usually has multiple forces behind it. Fundamental strength. Investors see a real business growing with actual demand. Short squeeze. Traders betting against the stock are forced to cover their positions as it skyrockets. Momentum traders jumping in. When a stock moves this fast, day traders pile in, pushing it even higher. The big question now, is this rally sustainable? A stock doesn't just jump 300% in a day without some volatility ahead. If the company can keep expanding CyPath lung adoption and show that cutting underperforming segments leads to a stronger bottom line, it could hold some of these gains. But if today's rally is mostly fueled by a short squeeze or speculative trading, it wouldn't be surprising to see some pullback in the coming days. What happens next will depend on how well bioAffinity executes in 2025. If they can prove that trimming down their business was the right call and continue driving growth for CyPath Lung, this stock might have real staying power. Either way, today's move put bioAffinity on the map in a big way, and investors will be watching closely to see where it goes from here. Our review on NMAX. Newsmax Media Inc. has just pulled off an IPO performance that's nothing short of extraordinary, with shares soaring 735% on debut day. The stock opened at $10 per share, but by the end of that first trading day, it had skyrocketed to over $83.50. That's a massive jump, and it didn't stop there. Just today, Newsmax shares are up another 179%, adding to the frenzy and pushing the stock even higher. With a total post-IPO surge now well over 900%, it's clear that Newsmax is capturing the attention of investors and fast. So, what's behind this meteoric rise? Well, first off, Newsmax has been positioning itself as a major player in the conservative news space. CEO Christopher Ruddy has been making the rounds, emphasizing that Newsmax is the fourth largest cable news network in the U.S. That might sound bold, but it's backed by some impressive stats. Nielsen data shows Newsmax ranking in the top 20 cable networks in both primetime and daytime viewership, a notable achievement considering it's up against giants like Fox News, CNN, and MSNBC. It's clear that the network is starting to make real strides in the industry, and investors are noticing. But what really sets Newsmax apart is its ability to cater to a growing conservative audience. With political dynamics shifting and increasing demand for alternative voices in the media, Newsmax has found its niche. The network has seen significant viewership gains following the election of Donald Trump and continues to attract those seeking an independent but conservative perspective. The political climate has certainly fueled this surge, and as more people tune in, the network's value continues to rise. From a financial perspective, Newsmax is capitalizing on its diverse revenue model. The company brings in money from TV advertising, cable license fees, digital subscriptions, and streaming, which gives it multiple channels for growth. With all these revenue streams, the company is positioned to scale, especially as its audience base expands. There's also the potential for ad sales growth, particularly as advertisers increasingly seek out conservative-leaning platforms to connect with their target demographic. Now, let's talk about the investor interest here, because it's not just retail investors piling in. Thomas Peterffy, the billionaire founder of Interactive Brokers, recently disclosed a 25% stake in Newsmax, 23 million shares. When someone with Peterffy's stature and financial expertise gets behind a company, it adds a serious layer of credibility. His backing indicates a long-term view on Newsmax's potential, and that's a big deal. Seeing a high-profile investor jump in like this tends to spark confidence, and you can bet that institutional investors are taking note. But let's not get too carried away just yet. While Newsmax's stock is on fire right now, it's important to remember that this kind of explosive growth comes with volatility. IPOs that jump this quickly often face sharp corrections once the initial hype wears off. Newsmax is still a relatively new player in the public markets, and its long-term success will depend on how well it can continue growing its audience and monetizing that growth. Will it be able to keep expanding its market share in an increasingly competitive space? Will it maintain the momentum? Or will the stock pull back once the initial excitement fades? Additionally, the broader media landscape is evolving, with cord-cutting and the rise of streaming services continuing to put pressure on traditional cable TV. Newsmax may be seeing significant growth, but there are broader industry challenges to keep in mind. How will the company adapt if viewership continues to shift to digital-first platforms? Can it continue to attract advertisers, or will it face the same challenges other cable networks are grappling with? For now, though, all eyes are on Newsmax as it rides this incredible wave of momentum. With its massive IPO gains, the support of influential investors, and an increasingly strong position in the conservative media space, it's clear that this stock has captured the imagination of investors. But as always, with high rewards come high risks. Investors should be cautious and keep an eye on how Newsmax performs in the coming months as it attempts to turn its newfound popularity into long-term success. For now, this is one of the most exciting stories in the market, and we'll all be watching to see how it unfolds. Our review on ICCT, iCoreConnect Inc. is on an unbelievable tear right now, with its stock jumping 654% yesterday and another 110% today. And just to put it into perspective, 209 million shares have been traded today alone. That's massive volume for a company in the healthcare tech space, and it's clear investors are paying serious attention. Now, iCoreConnect is a cloud-based software company with a primary focus on improving the productivity and profitability of healthcare practices. They've built an enterprise platform that serves dental, medical, and IT sectors, offering over 16 SaaS solutions that help with everything from e-prescribing to HIPAA compliance. The company's offerings include tools like iCoreRx, their e-prescribing solution, iCoreSecure for secure communications, and iCorePay for payment processing. And with more than 100 agreements with state and regional healthcare associations, it's clear iCoreConnect is entrenched in the industry. But what's driving this massive surge in stock price? There's a lot of buzz around the healthcare tech sector right now, and iCoreConnect is right in the middle of it. As healthcare practices increasingly move towards digital solutions for improving workflow and patient safety, companies like iCoreConnect are benefiting. Investors are flocking to the stock, hoping to tap into that growth as the demand for cloud-based healthcare solutions continues to rise. When a stock jumps 654% in a single day, that's usually a sign of frenzied investor excitement, often driven by news or speculation. It's possible that we're seeing a combination of market momentum and potential catalysts that are driving this rush. There could also be excitement over iCoreConnect's strong platform and its ability to bring real value to healthcare providers through streamlined operations and secure communications. It's also worth noting that 209 million shares traded today alone. Absolutely massive volume. This suggests that investors are actively piling in. But it also raises the question of how much of this surge is fueled by speculation versus fundamentals. A jump of this magnitude could trigger some short-term volatility, so investors need to be cautious. It's not unusual for stocks that rise this quickly to experience corrections as the hype fades. Looking ahead, the key will be whether iCoreConnect can sustain this momentum. The healthcare tech space is huge, and iCoreConnect's platform offers a lot of potential to scale. However, if the company continues to execute well and expand its market presence, it could justify this newfound attention and stock price growth. For now, though, iCoreConnect is definitely one of the hottest stocks in the market, and investors are scrambling to get in. Whether this rally continues or corrects will depend on how the company performs in the coming quarters. But there's no doubt that this stock is one to watch closely. Please subscribe, give the video a like, and watch more from our playlist. Thanks.